Hey guys, this is Paul Singh, the market speculator, and today what I'm going to do is answer some of your questions. We had a webinar on Tuesday. There was a fantastic attendance. We had close to 1,000 people signed up, so it was a huge webinar. Too many questions for me to get to. So what I'm going to do today is follow up with some of the questions that I couldn't get to. We'll talk about those. And if you haven't seen the webinar, you can go to the link here, and actually it's a pretty long link here for you to type out, but if you go into Twitter, I post it in there on the Bulls on Wall Street website. If you haven't already seen it with this webinar post, with this question and answer post, the link will be in there so you can go ahead and watch it. Today I'm just going to hit the questions that you guys asked. And in that webinar, we talked about basically the current market, the new trends for 2016 versus 2016. And we talk about it being turned upside down. Basically, what was working in 2015 is not in 2016, and what wasn't in 2015 is in 2016. So we hit some of those topics, hit how to trade this market here, and what we've been doing. We've been, I would say, one of the few that's been really successful here in 2016 playing this current market. So this is some of the stuff we talked about in here. So if you haven't already, go ahead, check out that webinar. It's an hour. We hit the topics pretty quick, and then there was a question and answer, and you guys had a ton of great questions, too many for me to get to in that webinar. So we're going to touch on that right now, and let's get to it here. Let's go ahead and get to the first question here. I've got about almost 30 questions here, so let's just hit these really quick, rapid fire here. Question number one from Bill. Top mentors always talk about focusing on the trade rather than the money. I get that, but isn't it always about the money? And that's true. At the end of the day, after a certain period of time, you have to see results. But if you're just focused on the results, you're not going to know if you're really trading well. You might make actually a bad trade, and that one trade ends up working, and you think you're trading the right way. If you guys heard me in any of the interviews I've done before on Chat with Traders or with Kanal, I've talked about this. In '99. I made a ton of money, went from 5,000 to almost 200,000, not knowing what I was doing. And I was really trading incorrectly. I just got lucky. And you know, after that 3 or 4 months, I lost it all. And so if I was results oriented, I would have thought I was trading good when I really wasn't. So what you want to focus on is the process, not look at that 1 week or even that 1 month and seeing what your results are. But you want to make sure you're trading correctly. Now, if we're getting into 6 months, 8 months, a year, and you're not seeing results, then obviously something's wrong. So at the end of the day, you do have to see some results. So Bill, you're right about that. But you really need to focus on the process and know that you're trading correctly and get the results from there. Okay, Coulter has a question here. Do you prefer small or large cap stocks? And that really depends on the market or the strategy. 2015. Basically was the FANG stocks, Facebook, Amazon, Google, and Netflix. Those are bigger stocks now. So those were larger cap stocks, but many trading strategies, especially breakout strategies, focus on more low float stocks. And really, when we talk about small cap and large cap, I'm looking at the float. And there are strategies for low float, especially right now. Maybe if you're trading breakouts right now in this market, something we touched on in the webinar. If you're trading breakout type strategies with the larger cap stocks, they're not really working, but with the lower float, small junk type stocks, some of them actually are working. So my answer to that is it really depends on what's working in the market, but I'll do either. I don't care. I'll trade a Google or I'll trade some small stock that I've never heard of. Okay, do you trade multiple time frames? And that's from Euro. Now, I know there's multiple time frame analysis. There's some guys who really focus in on that, and you want to see, different support levels on all these time frames. I really, for my swing trading, don't do a lot of that. With my day trading, I do want to know on the daily where some key levels are. or even higher time frames. But for my swing trading, for the most part, I'm just looking at the daily, and from there I can see very clearly where the major support and resistance levels are. Now, there are some strategies, late day strategies, where I might drill down to an intraday time frame, but most of the reason I'm doing that is to see, for instance, if I'm doing a short-term swing strategy where I want to see volume coming in at the end of the day, I'll look intraday to see where the volume was actually coming in. Was it midday? Was it late day? So some of that I will drill down to a smaller time frame, but for the most part, the answer is no. I'm not looking at multiple time frames. I'm looking at the daily for most of my swings that range from, say, 4 days to 2 months. Those type of swings, I'm just looking at the daily. Okay, how can you tell when the big money is in a stock? From Garland. Great question, Garland. In a couple of minutes here, it is pretty nuanced, and there's a lot of things to look at, so I can't answer the full picture here. But basically, what you want to see is volume coming into a stock when money starts to move, or even within a range. If you have a range, say a stock is trading from 20 to 25, and normally it trades 1 million shares, and all of a sudden you see a positive volume, meaning green bars, coming in at 1.5 million, 1.8 million, 2 million, where it's not really huge breakouts, but you see this underlying growth in volume. That's a clue that the big guys are coming in, and that's something to be interested in. Okay, how do you decide where you place your stop? I think I touched on that in the webinar. Again, another one of these questions where we can do a whole lesson on this, and I could do a whole webinar on this. But the short answer is you want to look at support and resistance levels. You don't want the natural volatility of a stock to take you out. So you want to look at these major support and resistance levels, and then you want to factor in the volatility of a stock. If a stock's daily range is $3 and you've placed your stop at $2, you're most likely going to get stopped out of what essentially still is a good position. So you want to think about, where is this setup broken? That's where I want to be able to stay in. So if that level is 4 points, I need a position size where I can hold 4 points and still be in the stock. All right. Karkash here, can you explain price decay in swing trading ETFs? We could do, again, a big analysis of the math and how it works. But basically, with these leveraged ETFs, there is price decay compared to the underlying. So let's say you're trading oil and the underlying is USO. If you're planning to hold this thing for a year or longer, you better be in USO. And for the added leverage, you're going to have to figure out another way. Maybe trade on margin or something. But if you're trading something that's within, I'd say, a month or two or under, you can go ahead and use a leveraged ETF, and the price decay won't affect you that much. But basically, what you're going to see is, let's say USO traded at, I know it's lower than that, but let's just say it was at 10 right now, and it traded at 10 for an entire year. Now, the underlying triple leverage, which is UWTI, let's say at that point it was at 2. Even though USO was at 10, UWTI will no longer be at 2. It might be at $1.50 now. And even though the underlying stayed break even, you won't be break even. You'll be losing money. So you have to think about, when you're trading these leveraged stocks, is this something I can get quick money out of? And if you're going to be holding on to this thing for more than, I would say, 2 to 3 months, you need to factor in the price decay. Okay, can you elaborate on how you analyze sectors? Now, I don't have my charting software up, so I can't pull that up right now, but basically every week within TC2000, which is what I use for my charting software, and there's a ton of places you can go for this, but they'll have a bunch of the sectors broken down, and in TC2000, I think it's over 200 different sectors or industries, and basically on a weekly basis, I look at which sectors did the best that week, and then I'll go into, say, the top 20 or 30 and the bottom 20 or 30. go in, and the reason I'm doing that is because I want the volatile sectors, and then I'm going to look for things like money flow, like we were talking about before. Are the big guys coming in and getting interested in that sector? Are the price patterns a type I'd look for? For instance, commodities, which we talked about in the webinar, are showing bottoming formations right now, and then I would get interested. So on a weekly basis, I'm doing these sector analyses, and from there, if there is a sector I'm interested in, I'll drill down into that sector and then pick out some of the stocks that look interesting there and build my watch list for there. I'd say about 70 to 80% of my watch list comes actually from my sector analysis and not the scanning I do for breakouts or bottoming formations or that type of thing. All right, what is your daily routine? From Joe. Now, I'm not sure if you're talking about specifically to stocks, but let's keep it at stocks. For my day trading, I'm up at 4:30 in the morning, and I spend about 30 to 45 minutes just getting myself ready, in terms of getting my mind ready, the different things I do, some exercise and some other things. But then when I drill down and get into looking at what I'm going to trade, I'm looking at pre-market action, I'm building my day trading watch list, I'm thinking about the different position sizes I'm going to take according to the price of the different stocks. As you guys know who day trade, sometimes it can be really difficult on the fly to think of your position size and how much you're risking. So I like to have that framework in my head before I'm actually going to trade during the day. So I'm doing some of that. For my swings, I've already done my analysis in the evening. So I basically know what my watch list is going to be. I know what stocks I'm going to be looking at. And then in the morning, I'll be looking for stuff that's breaking out from my watch list. Pre-market, I'll be looking at what SPY is doing, what gold's doing, what oil's doing, or whatever's in play right now to get ready for the day. Why do we consider this market a bear market versus a correction? I tend not to get too caught up in the verbiage, whether we call something a bear market or correction, and I know there's a technical definition of what a bear market is, what a correction is. I'm basically just looking at it as we're in a bit of a downtrend right now. So my mind is when I'm looking at the market, I'm thinking of it as a downtrend, and until the market says otherwise, and we're developing kind of a bottoming formation, which we talked about in the webinar. But my mind right now is in the framework of a downtrend. So now I know, the basket of 15 or 20 setups I trade, I need to take the right setups for this market. But whether we label it a bear market or correction doesn't really matter. It's more important to me to know that we're kind of in a downtrend right now. We have broke the uptrend that we were in since 2012. So that's what you really need to know. Define it whatever you want. I always hear you need to be consistent about your setups, but you suggest different tradings. Okay, so what the questioner is asking here basically is, I always hear people talking about you need to trade these setups and trade them over and over again, but you always talk about adapting. And maybe for a beginner, you need to really drill down and understand the setup. But really to make money, you have to know which setups are working in which markets. And again, we talked about this in the webinar. If you're a breakout trader, you're not making very much money right now because breakouts haven't been working. So at least on a swing level. So you need to know what kind of market you're in. And okay, I'm going to table the breakout setup right now. Or I'm going to trade it a little differently. Rather than playing for a trend, I'm going to take a quicker profit. Or hey, maybe I'm going to look at breakouts and I'm going to short them. Because I know they're all pulling back right now. So you do need to be consistent with knowing how to use these setups, but you really need to know what setups work best in which markets. All right, do you think a trader needs to master day, swing, and position trading to profit in all types of markets? I really think you do. There are certain markets that are more suitable to different styles of trading. Swing trading markets are going to do best in trending markets, which we haven't had of late. So it's going to be a little more difficult. And at that time, you can say, okay, you know what? I'm going to focus on my day trading right now. Whereas there are certain markets that are great for swing trading, the 99 internet boom, the mid-2000s commodity boom. You could not make, we see now that maybe you can make a lot of money day trading, but in those markets, swing trading was the way to go because you weren't going to be catching these huge gap ups when you were day trading. And I know we fear gap ups and gap downs now. In those markets, gap up and gap downs were great because you could pretty much predict the trend and get a feel for where you needed to be, where the market was going to gap up or down. So, I think it is good to have, if you can do both, to have some swing strategies, have a day trading strategy, and then be able to adjust to the different types of market. It creates alternative streams of income for you, in a sense, by having these different trading styles. When do you normally enter swings, time of the day wise? In go-go trending markets, I usually don't really care. In the current market, I'm usually waiting till the end of the day. So again, this is all about adaptability, adapting your trading strategies. So people who have been with me for a long time know that I'll take trades, swing trades in the beginning of the day, midday, late day. It doesn't really matter. Whereas if you've only been with me for 2 or 3 months and it seems like I enter usually near the close, that's not necessarily my trading style. It's just what I'm doing right now to fit the market. As you guys have seen, the market can be back gapping up 2% in the morning, and by the end of the day, it's failed. So I want to see confirmation. So that is why lately I've been waiting to the end of the day. So my answer for that would be usually it doesn't matter, but right now in this market, my preference is to wait till the end of the day. All right, how do you typically scale into a swing trading position? There's various styles I use. If I'm really confident about a strategy in a certain market, or the market is really trending, I'll go ahead and take a full position. If there's something like a bottoming formation, and sometimes there's failures in bottoming formations, sometimes it takes a little longer for them to develop, I'll scale in and take a half position and then go from there. So usually if the market is in a trend and I feel comfortable with it, I'm taking full size positions. A lot of my positions right now have been half size positions, or positions where I'm taking half and not making them full until I feel more comfortable with the setup. Okay, how do you typically scale? That's basically the same question there. Do you use a PC or Mac? I use a Mac, and I haven't had any trouble with IB or any of the software I use. This trader here had some trouble with IB charting. For those of you who use IB, I don't like their charting software. I basically use IB because I like their executions. So I use TC2000 for my charting software, and they have a I think it's a $30 subscription. Then they have a $100 subscription, which I think Kanal uses, that has all the bells and whistles, and it's real time. But what you can do if you're trying to save some money is get the $30 subscription, and then for $10 more, you can get the real time for $40. And you're missing out on some of this stuff. You can't go back 5 or 10 years, and usually you don't need that stuff. So that's a cheaper way to do it. What is included with the annual subscription? That's a subscription to the Bulls on Wall Street swing trade report, which I run. You get my trade alerts, but more importantly, you get the either evening or morning report where I basically go over my market analysis. I go over my watch list for the day, what I'm looking for, analyze the market, analyze my own trades, and we keep track of the trades I'm taking. And from there, even if you're not going to piggyback my trades, which actually I recommend that you don't do that you actually trade on your own, but it saves you the 2-3 hours a day you have to do in analyzing the market. You can go off my focus lists and then trade off those. And in every day, in the videos, there's education in there. And if you just listen to those for a month or two, you really start to pick up my trading style. All right, so could you please go over some commodity stock charts? I'll do that in a separate video, and I'll have my charting software up, and we'll go over that. And again, if you didn't catch the webinar, I went over FCX, I went over X, and a few other commodity stocks. And then I also went over oil, and basically they're all putting in the same pattern. So if you watch the webinar, that should be enough right now to get a good feel for the bottoming formation that's starting to develop in a lot of these commodity stocks. Okay, you seem strong in trading psychology. What books would you recommend? My 2 favorite books are Trading in the Zone by Mark Douglas and anything basically by Brett Steenbarger. So those are two great books. Steenbarger has more than two, but those are two authors that have, and really that's all you need. What I don't want you to do is become a self-help junkie and just start reading all these self-help books. But those are two really good books. And then kind of the basis of my overall thought process in terms of dealing with some of the obstacles in trading is a book that I recommended in the webinar, and that's The Obstacle is the Way. And that's based on the Stoicism philosophy. So if you're interested in that, go ahead and read that book. And I think that will be really helpful for day trading. And in that book, they use John D. Rockefeller, who was a great trader, one time owned 90% of the oil market. And they use some of his philosophies in that book. So that's a really good book to check out. Okay, I had to trade Google, and I heard you talk about capitulation. I looked it up, and it means surrender. How exactly do you use this in your strategy? That's interesting that the word is surrender, because that's basically what we're looking at with capitulation. So what we're talking about with capitulation, and we'll talk about it in a downtrend. So you have a stock that's downtrending, and through the whole trend, you're going to see a lot of people trying to play bounces, and they continually try to play a bounce here, a bounce there, and what happens, they keep failing. And there's going to be a point, kind of a breaking point. This goes into not self-psychology, but understanding market psychology, and that's just as important as understanding yourself, is understanding market psychology. And a lot of what we do is based on that. A lot of these patterns we trade, we just see them as patterns, but what we're actually trying to do is game the market psychology. And with capitulation, you're going to get to that point where traders have tried bounce after bounce after bounce, and at some point, at the same time, they all throw their hands up and give up. And you'll see a huge volume day to the downside. And usually big downside volume is a bad thing. But in this case, if we're looking to enter long, that actually can be a good thing. And that's the capitulation point, when basically everybody has given up, and that's what you're looking for, and that's where you're trying to enter. Now, again, we could do a lesson or two just on this strategy, but that gives you a basis of what you're looking for. You're looking for that point, and surrender is a great term. It's the point where everybody gives up. Okay, how do you scan for trades and create watch lists? I talked about that a little bit already for creating watch lists. I do a lot of sector analysis. And then for specific scans, now in the beginning, and most beginning traders, they think scans are this holy grail, and they're going, trying to develop all these intricate scans. And I went through that process. It took me about 2 years to realize I wasn't getting much of an edge in that. And sometimes the problem with scanning too specifically is you lose your feel for the market. So I use a broad-based, when I scan, I don't try to limit it actually too much. I want to see a little more. And with the charting software we have, it seems tedious to go over 200 charts, but in TC2000, you can go through through 2,000 charts in about 5 minutes. And going through those really gets you with a good feel for the market. So what I do, basically, I run a breakout scan. I'll run an end of the day scan looking for stocks with volume coming in, maybe some hammer formations, some bearish engulfing type reversal type plays, maybe some overbought and oversold scans. And the whole scanning process on a daily basis takes me about 5 minutes, maybe 10 minutes. So I'm not really that big on scanning. There's just a few I use, but that's kind of the overall process there. Okay, how much money do you need to start trading part-time? So I started with 5,000 and I slowly grinded it out. It took me between 5 and 6 years to get to full-time, kind of a mid 6 figures stake to trade. So if you're thinking about how much you need to start with for part-time, it really depends on your time frame. If you want out of the gate to be making, $2,000, $3,000, $4,000 a month, or even more than that, you're going to need a bigger stake. But if you're willing to grind it out, and all you have is $5,000, $10,000, and you know how to manage your risk, and you say to yourself, I don't need it right now, but I'm going to grind it out, and in 2-3 years, I'll have a big stake, and I can start trading bigger. Then you can start smaller. So it really depends on where you are, where you want to be as a trader, and how fast you want to get there. Okay, are you a believer in re-entering after getting stopped out? I am, and I often actually ask students people I'm mentoring, I'll ask them, they'll give up on a trade when they get stopped out. And then a couple of days later, it'll develop exactly the way they expected it to. You know, sometimes these things take a little time and that first shot isn't going to work. So when I get stopped out, unless the stock is completely broken, I'm still watching it. And this especially applies to overbought and oversold setups. So let's say you're trading a parabolic short setup. A parabolic short setup is a stock that has ramped up and you're thinking it's going to come down now. So oftentimes I'll take a small shot and I'll get stopped out. And then when it continues to go up, I'll actually get even more excited about it because I know it's getting even more oversold, and then I'll take another shot later. Now it's a slippery slope. You don't want to continually take shots in a bad position. So you have to be careful with it, and you don't want to get too big when you're doing this. But definitely, if I get stopped out of a stock, that doesn't mean it's off my focus list or watch list. Okay, what bull patterns should be avoided in a bear market? You know, again, that depends on the market. And you have to see what's working, what's not working. But definitely right now in this market, in this downtrending market, you have to be really careful with breakout trading. And I would say trend pullbacks. A lot of the trend pullbacks are failing, where you start to see a little trend and then they'll break down. So you got to be very careful with those two setups. You need to be quicker to take profits. And the long setup that you probably should be trading right now are bounce type plays when the market gets oversold and then you can get in on a quick bounce. Okay, do you have any advice for people who can't short because they're trading in an IRA? Basically, don't focus on stocks when shorting. Focus on sector inverse ETFs. So if you want to short an oil stock, rather than shorting that oil stock, go to the sector ETF. There'll be an inverse that you can go long, which is essentially shorting that. You can do the same thing with many sectors. If you want to short Goldman Sachs, a bank stock, you can go to a banking inverse ETF. All right, how do you suggest compartmentalizing the mindset between day trading and swing trading? That is a great question. I used to have one account and do everything out of that account. And I learned very quickly that, like, say I was in a swing position and I need to be patient with it, I would start watching it on an intraday level for my day trading. And that would actually get me to pull out of the swing trading when I really shouldn't, the swing setup, when I really shouldn't have been. Those intraday movements, while they may look significant on a short time frame, really have no bearing on that month-long trade you're going to be holding. So what I did is create separate accounts. So now I actually have 5 accounts. I have a position trading account. I have 2 swing trading accounts, one a more aggressive style for shorter plays. They're almost hybrid day trade swing trades. And then my normal swing trading account, which I use for the trade report. And then I actually have 2 different day trading accounts also. So I would say keep them separate. And if you can, don't day trade a stock that you're swing trading, because oftentimes that can affect your outlook on the swing trade. Okay, finally, one last question here. What do you mean when you talk about rentals? I think I use the term when I'm taking a quick rental. And basically what I mean by that is, rather than a longer swing where I might be holding it for a week to a month or 2, the quick rentals are something that I enter at the end of the day. And I'm basically playing it for a 1 or 2 day bounce. It's almost a hybrid day kind of swing. Or it'll be a day trade where, for some reason, I think can turn into a quick swing. So that's what I meant by rental. Just a quicker swing trade, a more aggressive swing type trade. Maybe you're trading a parabolic short, and rather than trying to take a move, down 5 points, you just want to see a gap down the next day. So that's what I mean by the quick rentals. So, all right, a lot of great questions. That was 27 of them. Actually, there were a ton more that we answered in the webinar. So if you haven't checked it all out already, again, I'll pull it up here. This will be the link here. You just put in your email here and you can watch the webinar. I'll have a link out on Twitter. If you go on Bulls on Wall Street in the blog, the link will be in there. The whole thing is bullsonwallstreet.com, pages, swing-trading-webinar-feb 2016.html. Be easier, just click a link and you'll have access to that. Now, if you want a free trial to the swing trade report, go ahead and go into bullsonwallstreet.com. Right at the top of the page, there's a really nice redesign here. Just go to swing trade alerts and you'll have access here to be able to sign up for one of these plans here. And again, be sure, if you haven't already, to check out the webinar. A lot of good stuff in there for the current market. I'll be doing some more of these, both public webinars, and I'm going to be doing a lot more of the member-only webinars where we go more in depth into a lot of the stuff we've been doing. And those are going to be held at least once a month, sometimes maybe twice a month. And we'll hold one of these public webinars again. So go ahead and check that out, and I will see you next time.